Hello investors, welcome to Simpli Stocks. Recently, Cochin Shipyard received a 5,000 crore rupees order from the Indian Navy, after which the stock also rallied a bit. Apart from CSL, other shipbuilding businesses are also in focus because many interesting things are currently happening in the shipbuilding space. So this can be a good time to explore these businesses. That is why in today's video, we will discuss one PSU shipbuilder where I am seeing several positive triggers. Along with that, we will also talk a little bit about what is happening in the sector. But yes, as a very strict standard disclaimer, this video is strictly not a buy or sell recommendation. Please keep that in mind. With that, let's get started. Now see, China, South Korea and Japan are three largest shipbuilding countries in the world. Out of these, China and Korea together control nearly 85% of the global shipbuilding market. But the issue right now is that they have so many orders on their hands that production capacities are booked for the next 4 to 5 years. And setting up new shipyards takes at least 3 to 5 years. At the same time, many European countries also do not want to depend only on China or Korea anymore. And apart from Europe, inquiries are also coming in from the Middle East. So because of all this, we are seeing a global supply chain shift in shipbuilding, and India is emerging as a preferred shipbuilding destination. Till now, Indian shipbuilders have mainly focused on defense and small non-defense vessels, but now there is increasing emphasis on expanding the non-defense manufacturing base as well. Plus, looking at this opportunity, the government has announced almost 70,000 crore rupees package to boost the maritime and shipbuilding sector in India. This package is divided into four parts. On one side, the companies that get their ships built in India will receive subsidies. They will also get financial support through credit notes. On the manufacturing side, if shipbuilders expand capacity or set up new shipyards or docks, they will also receive subsidies from the government. So overall, we can say that the demand is very strong. Just like we saw the China plus one shift in chemicals 2 to 3 years ago, something similar is now playing out in the shipbuilding space. And the government is also supporting shipbuilders to help them capture this opportunity. Among all this, the business that we are closely tracking in our Simply Stocks community and the business that we will discuss today is Garden Reach Shipbuilders and Engineers, or GRSE. So GRSE makes small and medium-sized warships, patrolling vessels and other platforms for the Indian Navy and Coast Guard. It currently has the capacity to build 28 ships at a time, and looking at the rate at which demand is growing, they are also expanding capacity. By the end of 2026, their capacity will increase to 32 platforms at a time. Beyond this, the company is also undertaking brownfield and greenfield expansion to add new facilities. 5 new facilities they are planning to add. Out of these, 3 sites are in Kolkata, which have been acquired from Shyama Prasad Mukherjee Port. These are brownfield expansions and should be ready within 2 years. The other two facilities are in Gujarat, which are greenfield projects and may take, I think, 3 to 4 years to become operational. This capacity expansion is very, very important because demand in the sector is currently much higher than the supply. Indian shipyards must expand quickly to meet this growing demand. Now see, this is more of a medium to long-term outlook, which should definitely help GRSE. But in GRSE, the major trigger is actually also in the short term, and no one is talking about it. After the December quarter ended, GRSE's order book now stands at almost 18,500 CR. It is currently working on various platforms from the Indian Navy, Ministry of Earth Sciences, Ministry of Mines, Defense Ministry, and even a German client. Now, the big trigger is that company is about to receive a 30,000 crore rupees order for 5 next generation corvettes, or NGCs, from the Navy. These ships are designed to counter surface ships and submarines. GRSE has been selected as L1 bidder. That means it has submitted the lowest bid and will most likely receive the order. Some approvals are still pending, but it is expected that before the end of this financial year, the order will be officially awarded and announced. This means that within next 1.5 months, the order book can jump from 18,500 crore rupees right now straight to over 50,000 crore, nearly 2.5 times. Think for a moment now, if CSL trended that much after winning a 5,000 crore rupees order, GRSE is about to finalize a 30,000 crore rupees order. So in the coming weeks, GRSE may remain in focus and you should be closely tracking this business. Now, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Anyways, let us come back to the topic. Apart from NGC's order, their management is also closely tracking P-17 Bravo project. The P-17 Nilgiri class are stealth frigates being built indigenously in India. GRSE is currently working on 4 P-17 Alpha ships, so it already has design experience and supplier relationships they would require for P-17 Bravo. That is why there is a high chance that out of these 7 P-70 Bravo ships, GRSE may receive 3 to 4 again. That is one thing in pipeline. Plus, recently the work on long pending landing platform dock or LPD project has also started progressing. Overall, apart from this 33,000 crore NGC order, GRSE is targeting tenders worth around 1.55 lakh crore rupees, and this is only for defense, mind you. If we also include the non-defense segment where inquiries are coming from ONGC, Indian Oil and others for VLGCs, roughly over the next 1 to 1.5 years, around 2.5 lakh crore worth of orders are likely to be announced in the shipbuilding sector for which GRSE can bid. So this is also a major trigger for the business, because what happens is that winning orders gives investors and analysts strong visibility for earnings. Once orders are secured, future sales and profits can be projected easily. That is why markets react so positively to such order wins. Moving forward, you will see GRSE's results have also been very strong. Sales grew by 49% year on year and profit increased by 74%. What happens is that in shipbuilding, revenue recognition accelerates when a project reaches final stages, leading to strong sales growth, margin expansion, and also profit growth. And for GRSE, several project deliveries are scheduled in FY27, because of which it will turn out to be peak year for the company. So on one side, GRSE can trend due to order wins, and on the other side, FY27 results can also be a strong trigger. So these are the triggers from both the sides. That is why I am saying that you should be studying this business independently once. Now, before ending the video, let us also discuss the risks that you should consider here. The first risk is delay in order allocation. In shipbuilding, it can take 1 to 1.5 years from issuance of an RFP to final order allotment. Even if it is a non-defense order where client approaches directly, the negotiations can continue for up to 1 year. So that is a risk you need to monitor in GRSE as well. Although the pipeline is strong, order allotment can still get delayed. However, I believe at current stage, this NGC's order is that news should at least come out before April. The second risk is that sales can remain flat or even decline in FY28. Because see, as I told you, many ships will be completed and delivered by GRSE in FY27, and then the following year, that is FY28, may be slower. Whatever new orders will be received by GRSE in FY27, their design finalization will take time and execution will start by H2 FY28 or Q4 of FY28. It is going to take time. Now, although spare parts and maintenance revenue from recently completed ships may provide some cushion, but this is a risk that must be tracked closely. If you are interested in GRSE, even though things may improve again from FY29, but because of this risk, you have to have your exit strategy very well planned in advance for the short term. Now, at the end, I will say all this research takes a lot of time and effort. And see, I bring this analysis to you for free. In return, I only ask for your support through likes and subscribes. If you support us by liking this video and subscribing to our channel, I will be much more motivated to keep bringing such detailed analysis for you every week. So do like this video, and yes, also subscribe to our channel. I will see you in the next video. Happy investing.